Hi, welcome to episode 47 of Startup Strides. Today, my guest is Natasha Naidoo. We saw her co-founder, Vika Manos. Hopefully, she'll join us next time. They've co-founded ByteSized Capital to back AI native infrastructure, particularly the trust layer powering critical industries like healthcare, defense, finance. And they both come from very distinct backgrounds, distinct paths from science and operations to investing, and shared 2 decades across venture and regulated industries. But they have one conviction that UK mission critical AI isn't underfunded because it's small, but it's because it's hard. And today we're going to dive into why regulation actually can become distribution, what AI native truly means, and the futures they're betting on. Welcome, Natasha.
Hi, thank you so much. I'm really excited to be here.
I'm super excited to be doing this episode with you. We've already met a couple of times. We've discussed and talked about this stuff on our own, and I'm excited that we have the opportunity to record it and put it out there for other people who might be interested. We have a lot of questions to go through. I guess before we start, I'd like to give you a chance. The stage is yours to introduce yourself in your own words about your background and how it shaped your career to current day or
Amazing.
invested days.
Thank you. Thank you so much. So for me, I have a bit of a non-traditional investor background. So I've always been driven by a pure utilitarian framing of how do I do the most good for the most people in the least amount of time? And so if I have a 60-year career, what can I do with that time? And with that framing as a kid, I was like, well, you're going to become a scientist. And so I'm a molecular biologist by training. So many of those innovations are just sort of sitting on scientific journal shelves places and not actually out in the world. And I realized actually that's something else. That's not science. That's business. And I was like, oh no, I guess I need to go get business skills. So I was very lucky. My career has been marked by sort of right place, right time, and just getting lucky. My company's name is Pula Advisors or Pula. And that was really cool because what we did is work with NGOs, seed and fertilizer companies, governments, microfinance institutions, basically anyone who at the end of their supply chain had people who they wanted to insure. And my job was sort of like growth in product. And so I helped grow that team from the three of us in Nairobi to over 60 people across 10 countries in 14 months. And you know, that was a really amazing experience because it's like, oh, wow, you are responsible for, a million people getting insurance. And it's not just insurance, but it's like many of our customers were unbanked. And so it's like, this is their first financial product at all and exposure to like sort of what is finance. And that was really fun and interesting because the way that you solve problems in emerging markets are quite different than the ways that you solve problems in mature economies. Because in many cases, emerging markets don't necessarily have the same capital and labor dynamics that you do in mature economies. So, for example, if today I wanted to do robocalls to 500 people to say, hi, how did you like the quality of this service? There are many options I can do, right? Like I could use Twilio, I could use, tons of AI options, not a problem. And I personally am actually not involved in any of the phone services that all I'm literally just typing the message and being like, here's my money, send. That's just not the case in many emerging markets. In many places for us, we would be setting up call centers and working with regulators and working with phone companies to be like, okay, well, actually, like the amount of phone time that we're buying is like a meaningful percentage of the total time available in this country. How do we work with you to like set up our own, literal like hardware infrastructure in the phone companies? And working with regulators and phone companies to be like, okay, like, can we geolocate people's location, based off their feature phones? And it's different in different countries. And in many places, this was the first time that people had been asking those kind of questions. Like, this is whatever we ended up doing became the best practices for not just countries, but entire regions sort of moving forward. And that was really fun and really interesting because it's solving hard technical problems with the technology of insurance, but it's also solving sort of market problems as well. So in many places, like the cost of labor was extremely low, sort of round almost to free, but the cost of manufactured goods extremely high to like almost unattainable. And so how do you solve a problem in that kind of market versus how do you solve a problem in, say, the UK are going to be really, really different. And so for me, it was great to have that sort of mental flexibility of being able to toggle between different markets and what the constraints were. But also, it was really useful because you have to work with regulators, you have to work with different groups to see how, if this is a technology, how do you bootstrap it to make it work in different ways? And for me now, when I reflect on like that experience, yes, the sort of, you're gonna, utilitarian, help a million people, for sure, that was great. And learning how to do business by doing it in the trenches, also really great. But I think maybe the most valuable thing from that period for me was when you're working in an undefined area where no one's really done something like this before, and you're trying to solve a goal, figuring out how to use tools in different ways to solve those problems. It, for me, feels very similar to what a lot of companies are doing now with AI, where we don't know exactly we know what the end goal, we can see what that vision is, but the how you get there is still very much being defined, both in terms of what are the regulatory structures, but then also what are sort of the social and economic limits of what you can do and sort of what is right, fair, and equitable. So around that time, Paul Polson was making grand pronouncements and was saying, I want to reduce plastic in the supply chain by 10% at Unilever. And I was like, wow, what I'm doing at Pula is great. And we are helping millions of people get insurance. But what he's wanting to do is literally moving ecosystems. How do I get those kind of skills? Because that's sort of, again, if you only have 60 years, what do you do to do that? So I went to the UK, got an MBA, came back to the Netherlands, and very much right place, right time. The company that was leading my husband's, that had led his Series A, they were having a dinner for family of the founders. And the lead investor was asking these questions. She was like, I'm looking to hire someone. I want them to have a background in science and also be an operator. Ideally, pie in the sky, emerging markets, because we're also investing in emerging markets, and knows about business. Do you know anyone? I was like, I do indeed. And that's how I met Vika. She is now, as Jevin mentioned, she's co-founder of ByteSized Capital with me, and we got to work together for a couple of years at Anthemis, and it was a really good time. I learned how to become an investor, and like that was really powerful for me because as a researcher, you're sort of working on an individual level, and when you work at a firm, you do have that sort of lateral view of all of the problems within your firm, and you can have quite high leverage in solving problems within your specific market. But as an investor, while you yourself are not getting like your hands dirty doing like the work, you are funneling capital into specific areas and solving problems in a sort of more systematic way of saying, okay, the 10,000 foot view, where are the problems and where are the opportunities that we can put money and time and attention into solving these problems, and will they create real value in the economy and sort of have large knock-on effects. And so for me, I was like, oh, actually, that is a bit more of how I think about problems, is cross-applying solutions I've seen in some areas to problems in other areas and helping solve that way. And so that has been, for me, I think the way in which to answer that sort of life question of how do you do the most good for the most people in the least amount of time? For me, it's investing in the infrastructure of society. And that's why we started ByteSized Capital, because for us, I'm sure we'll get into it more, but essentially what we really are interested in is how do you use AI to solve sort of the larger societal problems? And a large part of that is how do you allocate the capital to get to those places? So that's what I do at ByteSize.
You mentioned bite size, which is again perfect segue to my next question, and we're gonna delve deeper into the philosophies you guys use in terms of investing, the sectors you're looking into. But before that, just kind of briefly, I want to hear from you. What drove you to launch your own venture fund, right? The ByteSized Capital, instead of staying in existing funds? Because obviously staying in a fund means you just continue like investing, versus launching anything is really hard. But launching a VC fund, not only it's hard, but it's also you have to raise a lot of money from people to invest in companies that are very innovative, very in the future, get an LP commitment, etc. So I guess what drove you to do that, launch your own VC fund, and what new freedoms and perspectives it gave you?
Yeah, absolutely. Thanks so much. So there's a couple of things. There's a few reasons why we're like, we need to launch our own fund instead of working with an existing one. And I think there's the obvious answer is, look, if you have a new thesis that focuses on AI native companies, then you can invest in a lot more things that are actually going to help go forward in the future. Because you don't have the sort of legacy ties to pre-existing business models and business structures. Let me break that down a little bit more clearly. Let me step back slightly and tell you what ByteSized does. And then, so ByteSized Capital, we are an early stage VC. Sorry, we're a young VC, but we're also focused on early stage, so pre-seed and seed investment in the United Kingdom, focused on the infrastructure trust layer of companies that are there. So we look at healthcare, commerce, so logistics, manufacturing, energy, infrastructure, fintech, and then defense, we look at aerospace, hardening of assets, and also cybersecurity. And so it's a wide range of things. But the thing that all of these different areas have in common is that they're all regulated. And the reason they're regulated is because that is what society needs in order to function, right? Like you don't have healthcare. I mean, you can have healthcare with no rules and no laws, but then you don't know what, you have no trust in what you're actually ingesting and being like, is this real, or is it snake oil? Is it chalk? You don't know. But if you get something from a pharmacy and you know that it went through the regulated pathways, you're like, oh yes, I do trust everything in this store, that it's what it says on the tin is actually what it will do. Health is a very obvious example, but you also, same with banking, right? Like we all trust money is real and that it's backed by something. But if you're like, or you're very skeptical and you're like, well, all fiat money isn't real and like destruction to society, you're like, well, actually, it's just the larger, everyone trusts each other. And that's what the value of fiat money is actually as trust. And so for us, we're really interested in the future, AGI, ASI, those are coming. The question is when, not if. That for me is a table stakes belief. And so building on that belief, I want to say, okay, what does society now need to be able to take that value and take those gains and distribute it amongst the people in society? Because that's how you basically have civilization. Otherwise you have a lot more chaos. And I don't want to live in a world that's sort of ruled by barbarism and like who literally is like, I am stronger than you, therefore I'm going to take your resources. Like, I'm not that strong. I want to live in a society where, everyone is taken care of and we have a base and like, you can flourish and succeed. And so I think AI has that potential to, 10x in terms of speed and 10x in terms of value. So if you have a 100x value proposition in the next 10 years, then how do we capture that in ways that are more equal and distributed? Because of course there's going to be massive winners and losers. Yes, that's true. But I think one of the things we've seen, and this is going to be, hot take, the quality of cloth tends to still be higher than from the 1850s. And you're just like, oh, why is that? And you're just like, well, manufacturing just globally has gotten a lot better. And so like, everything that way has gotten better. But the gains of that distribution have not been equal. And so I think what we're seeing is a lot of backlash around like, hey, look, like I have been, the sort of rise in populism globally has been, it's not unjustified for people to feel that they are being left behind. And that trend is going to get a lot worse with AI if we don't address it immediately, if we don't make practical steps to build for a world that doesn't leave people behind, that doesn't just accumulate and concentrate power and wealth. Because there is going to be, concentration of power and wealth that's going to happen. Obviously, if you have X, productivity and gains on the table, there's going to be some amount in that. But can that be distributed in a more systematic way and in the society, in the trust layer? I think yes. And I think that that's really interesting because if you can do that, that seems like it will make life better for everyone, increase global standard of living. And, if everyone increases global standard of living, that is actually a much more stable outcome than sort of mass chaos and, Sam Altman having all of the money and everyone else being like, there is no value left.
Just to recap for myself. So essentially the reason for you guys to launch ByteSized Capital is kind of twofold. One is because you have a new thesis, which is AI native infrastructure. It gives you more freedom and much more freedom in terms of not only the startups to invest in, but also to deploying your capital into startups you think matter essentially, right? And the second is more kind of philosophical reason for launching it, is to address this gap that already exists, but will become even wider with AI. Is that right? Would that be a fair recap?
Yeah, those two, and also just like our ability to be nimble.
Hmm.
And so like for us, we're a two-person house, and we don't intend on expanding in terms of headcount. What we do intend on expanding is in terms of agent count and the number of AI um, employees or teammates that we have.
Hmm.
And that's something that I think is really different from companies that are not AI native and companies that are. And so companies that are AI native having the ability to build your AI structures and like sort of teams and departments outside of your core expertise instead of say having to hire an entire marketing team. You can be like, okay, well, what are the off the shelf like marketing agents and software that I could use? What are, the billing, what are the compliance, what are all these pieces? And you work with them in many ways much more as an executive would of, hey, I have this team, this is what their functions are, I can get the different pieces I need, as opposed to having to work with a person doing that or a team of 10. And it's not that I don't like people. Obviously, I'm very pro human, but I do like the ability to iterate really fast. And that's the sort of difference is we have only us as a company, we've only been around for a few months, but we've been able to really iterate quickly on a lot of our, for example, like diligence documents and our legal processes and all of these things that normally would take months to years just because you have a lot of people in the loop. It's not that again people are bad, but it's I would have to talk to someone and say, hey, can we build this? Can we do this? And then they go away and do it, and then they come back and we see it. Versus now, I can go into Figma and iterate on our deck like 50 times in the course of an afternoon, and we can just be done, right? And we're like, oh, okay, we have a pretty good deck done in a week, as opposed to a pretty good deck done over 5 months.
So the AI. So sorry, did I interrupt you?
Oh, please, that's useful.
You mentioned AI native infrastructure, so I wanna ask a question because I feel like I have some understanding of it. I'm sure you have a better understanding than me, but for outsiders, for people who are not really the insiders, if you could just elaborate what like AI infrastructure, AI native infrastructure, and also trust layer means, so we have kind of a better understanding moving forward.
Thanks. Yeah. So for us, when we think about AI native companies and AI native infrastructure, there's sort of two pieces that we think about. So one piece I've alluded to a little bit, and I'll just explicit. It's companies that use AI to solve a lot of their basic business needs, and this is going to be the same kind of needs you're going to have regardless of if you are, for example, a healthcare billing company or if you're a robotics manufacturer, you're still going to have to deal with internal billing, internal compliance, regulatory compliance with whoever your regulator is, um, advertising, all of those different sort of regular business stuff. Normally, in a pre sort of AI native company, you would be like, okay, well, we've got our pre seed, 500K. We're going to need to hire someone to be all of these different pieces. You might have someone to be marketing. You might have someone to be sales. You might have someone to be a secretary. You might have a couple of engineers, right? That would actually be much more than 500, but depends on geography. But you'd have to hire a team, and some of the team is doing like your engineers are doing the things that are core to the business, but the other people are doing all of the business functions. And if you're an AI native company, you're like, oh, well, actually, I can buy off the shelf options to do all of those pieces. And yes, maybe you might hire someone to help coordinate amongst those pieces, and they're just like the business person, but maybe you might do it yourself, right? Because there's, again, plenty of AI agents and options to help you coordinate all of those pieces. And I think basically any company that's sort of AI native and moving forward, they recognize, hey, here are what our strengths as a team are. Here are what our weaknesses as a team are. Are there ways that we can buy AI options or build AI options internally? No harm in buying or building. It's up to you. It depends on your problem. To do all of the regular stuff. And that's sort of like, we're interested in that. That's fine. But then the thing that they spend their time on is what is their company doing? What is the problem that their company is trying to solve? And that's what's really interesting because then they can use, AI as the rails that they build their entire company on, and really solve that problem much, much quicker and with really dedicated attention and force behind those problems. And so for us, that's kind of the difference between sort of like legacy companies is they might have people and they might have infrastructure that they have to support, and an AI native company is really how do we just focus on this one problem and do that problem really, really well, solve it very quickly and solve it very efficiently. And so that's also the difference is when you look at the data of companies, how quickly they've grown, become revenue generating, not even, I mean, also profitable, but revenue generating even, right? Because many companies that aren't AI native, so say you were formed in 2020 or formed in 2021, it might take you up until maybe the A before you actually start really generating revenue in a meaningful way. I speak with people who are in AI native companies and many don't actually take venture funding at all because they don't need to. You can be bootstrap because you can just iterate over a weekend and then be like, hey, would you buy this? And if the answer is no, they're like, oh, let's iterate some more. Would you buy it now? And being able to really quickly, rapidly prototype and then also charge for that and become revenue generating to the point where maybe you don't need more. Maybe when you do get an influx of equity or non-dilutive funding, either of those processes that you're directly putting that into what grows your business as opposed to using it to find product market fit. And so I think that's kind of the fundamental difference is like the ramping stage looks quite different between traditional and AI native companies. And then the second question you had was around the trust layer, which is again a word I sort of just like throw around. So for us, the trust layer is all of these areas that are regulated within a system. So they're a good example, I think, that sort of illustrates the trust layer is if you think about the NHS. The NHS is not going to be run by GPT-12 in, 10 years. It's going to be still, run by the government, but there are going to be pieces within it where AI is going to intersect. Because if we think that AGI or ASI, it's not a matter of if, but a matter of when, then how do you harness that super intelligence into the NHS system? And so what you need to do in order to be ready for that is to build AI native companies around the system that already exists and that can actually have humans in the loop and enhance their skills. So for example, like Marge in accounting, she's the institutional knowledge of a particular branch of the NHS. She knows, everyone who's hanging out in Birmingham in this particular office and like knows all the clients and all the doctors and all of that. You don't want to get rid of Marge. You want to say, okay, how do I make Marge way more effective? That instead of going through 100 people every couple of days, she could do 100 people in 2 hours, and being able to like go through that client list and go through that billing section. And so that's something where AI, the company that the AI native companies that sit in that section that help build around the status quo, we think that they're going to be really successful because that is where trust is built within a society. And that's what keeps you having laws and civilization, because, you don't want to be, you want to be able to trust that you're not buying snake oil. You want to know that this is real. But how do we make the processes that get you to there faster and more efficient?
Fair enough. How would you distinguish between a true infrastructure company versus an application layer kind of startup?
Yeah, that's a great question. So, I think the question of what is true sort of infrastructure layer versus something that built on top has to do with when you think about so you look at this company and you're like, wow, this is really cool. So for example, okay, I'll just give you a real example. I was looking at a company last week and they are looking to build a new learning layer to replace a lot of the sort of social media that people have. And what they're doing is essentially making an entire ecosystem that lives in your phone where you can go through journeys and say, okay, I'm interested in something like Japan. I want to know about Japan. And so it sources the AI agent within that app sources information about Japan from all of these different places. And then it like serves it up of like, oh, do you want to know about food? Do you want to know about culture? Do you want to know about dress or whatever? And you sort of go through this process. And then at the end, you're like, you've completed this journey. Congratulations. For me, that is a little bit higher in the stack than something below that, which would be, but how does that AI agent that they're using actually go and source that information? And so that would be for me, okay, well, you're going to need to have an open source protocol of agent to agent internet and agent to agent communication. And what does that look like? And so currently, like there isn't an open source version of that built. Probably the closest thing for like internet right now would be like core AI in terms of like they have a bit of a walled garden. It's only in like the Apple ecosystem, and it's a way for agents to find and interact with each other. But that is much more for me when I think about like what is commerce in the future going to look like. Well, much of the traffic that's happening on the internet right now is actually agent traffic, and the internet's not built for agents. It's really built for humans. And so the person or the company that builds the sort of agent to agent internet and helps agents find who's reputable, again, build that trust layer, make sure that the incoming agent that you're talking with is actually real and not malicious, and you're not actually taking in that knowledge and then like contaminating your own sort of agent brain. Those pieces are going to be really important. So how do you make sure it's trust? How do you make sure that you actually have sort of like practical ranking systems? How do you make all of these pieces together? That for me is much more infrastructure, but on its face, you're like, well, both of these are agents searching things. And so one, I think, sits on top of the other. When we think about what does the sort of future of commerce look like. In a more general sense, the infrastructure layer is what everything's going to be built on. So for example, if you think about in banking, the current system of banking is built on this COBOL layer. And COBOL is a very old sort of early programming language. And one of the challenges is like no one uses COBOL anymore. And so like many of the people who were trained on COBOL and helped put the banks onto the system are retiring now. It's that sort of old of a language. And I think that when we think about AI infrastructure, it's okay, well, like COBOL allows everything else to sort of build on top and like have different pieces talk to that layer. And it allows sort of interoperability and digitization through banks. That is what we're going to need to have across many systems to have AI be effective in, for example, health or in different parts of like logistics and manufacturing. You have things that are like still physically with paper. Not only is it, okay, how do you digitize this, but how do you add an AI layer that interacts with people? Because there's going to be AIs to AIs talking in the future. That seems very obvious, but to get to the first AI level that like, okay, you're talking, but like we still have all of these humans in this business and they're still using paper. How do I interact with them? That layer for me is the sort of key infrastructure layer of, because otherwise the humans are going to just be fully left behind.
Fair enough. But one thing I want to ask a very quick follow-up question to
Please.
what you said about AI native essentially helping people to move fast, iterate fast, scale fast. That significantly lowers the barriers of entry for a lot of people. I mean, and in this stage, I feel like everybody wants to do a startup. Everybody wants to get into that space. How do you compete? How do you stand out?
Yeah, that's a great question. So I think for us as an early stage investor, it's always like founders are important. That like, that's really an important part of the journey because the technology is like less important because people can always pivot. That's true. But I think right now the question is actually even more focused on founder and looking at the problem founder fit. And so many people look at, product market fit sort of later on down the road. But what I'm really interested in is this person who's this founder, are they really obsessed with this problem space? And what sort of in their past and in their history makes them the best person to solve this problem? And I think that as venture capitalists, we looked at this a bit before, but I don't think with the sort of intentional rigor that we have to look at it now. Because at the point where anyone can just spin up a company, they're like, oh, I have this, it's a pretty good idea. Like, let me just make a lovable website because, that's what makes a company real. Let me buy a domain name, all done. And, you can get a pretty good MVP really fast. Again, you could spend like a weekend on it, maybe a week if you want something really excellent. But the person who's really obsessed with the problem and of like, how do I solve this problem fundamentally? They're not going to be happy with iteration 1 or iteration 2. They're always going to keep fighting to make it better till the problem itself is solved. And so I think in this era of time, AI is not, it's just a tool, right? And it's just a tool that helps you iterate those problems, iterate against your problem faster. And with, you can try a lot more options. So instead of, 5-10 years ago, you're like, okay, well, I have two ways our business can go. And I have to make a decision and I can't run both of them because it's just too costly. I can't A/B test really these like large business strategies, but I guess I'll go with option B because I've made a compelling argument, but option A is probably still
Mhm.
pretty good too. But like, I don't know. Now within in an AI native world, you're like, oh, well, actually, like I can try option A, B, and C, see which one works, and then go with that and keep iterating. And so it just gives you a lot more optionality, particularly if you're playing in a digital space, of seeing what works and seeing how you can solve those problems. And so for me, when I look at who is going to make a good founder, it's not just the, oh, did you go to Stanford? Oh,
Mhm. Mhm.
you know, did you work at McKinsey?
Yeah.
Like those are, great. Those are fine indicators. But actually it's, hey, did you major in something where it made you really obsessed with this space? Like I recently met someone who is really obsessed with social dynamics. And so he's studied sort of symbolic language and how people think and interact socially in undergrad. And then he was like, where is the best place that like looks at social connections in the world? I'm going to go work at Meta so I can learn how they think about social stuff. And then he was like, okay, now I want to go do some neuroscience. And so he did another degree in like neuroscience, again, to figure out how do people think and like what is actually the science behind connection. And so when he's like, I'm not sure what I'm going to do now, but I want it to be social AI. I'm just like, yeah, that seems very believable because like you are obsessed with the social dynamic and you're going to not be content with, I got a bunch of people to talk to each other using AI and now they have AI friends. You're like, no, I want to really crack this in a deeper way. And I think that for me, that's kind of what I'm looking for is what is keeping this person up at night? And I really hope that it's this problem. And if
Mhm.
it's this problem, then amazing. Like we should keep talking. And if they're like, it's something else, then like maybe you should be doing that something else because that's what's like really getting under your skin and making you sort of antsy.
That's a very fair question. I feel like I'm seeing a more of a trend, seeing people saying, investors saying that there's a huge, I mean, different people call it differently, but essentially that founder problem fit, founder market fit, kind of the passion obsession was the problem, right? More than the solution itself. We've talked about native structure, we talked about trust layer, you mentioned regulated industries, and I like to always ask a question that kind of brings out a contrarian belief. And I'm going to ask you that too. So, what's the contrarian belief you hold about AI in regulated industries?
I don't know how contrarian this is, so you can tell me if you're like, no, you need to do another one. But I actually think that it's the only place where alpha is going to remain. And the reason I think that is because the foundation models are so good. When you look at AI from 2022, 2023, you had a lot of like specific large language models and like early AI and niche players, and they were actually doing really, really well. But you look now at what are the capabilities of, I mean, look, like just this past week, OpenAI dropped Sora 2. And I think about all of the there are multiple unicorn companies in the video and image generation space, and that's great. And they've already made their money and they've already exited, and congratulations. And do I think that an image generation company or a video generation company now, if you were launching, like that just doesn't seem like that's a space anymore because the foundation model has already taken that and it's doing really well. Like when you play around with it, you're like, well, it's limited to 10 seconds, but that's now, in 2 years, is it going to be making feature length movies? Maybe, right? Or is there a hack where you're like, this does this piece and you can do it frame by frame? Probably. And that's kind of those things where it's like the capabilities of the foundation models are really eating so many things in the general sort of commercial space that I think that for me, basically only regulated areas present a moat in terms of regulatory capture because if you have to deal with patient data, if you have to deal with customer data in the financial sense, or if you have to deal with like state secrets, all of those require a level of having to do the paperwork and having to get compliant and having to have the regulator say, yes, you're fine. Like, we're good to work with you. Let's keep going. That I don't know if it's like really in terms of like the spaces that the big labs are playing, yes, you could spend time doing that, or you could spend time like doing something else amazing and different. And so it's just, I feel like in terms of like their return on investment for like, GPT is probably not going to want to spend all of that time to become compliant for all of these places. But there are companies that will spend the time doing that. And I think those are the companies that are going to get into those spaces, and they're going to be really, really sticky. And because they're already in those spaces, they can take the advances that the foundation models are already making and pump them through their own products to make them more effective. So, a sort of classic, if you have a Claude wrapper that's, compliant as Claude is like more Opus, more Sonnet, more things, it gets better, right? Like, and you don't have to deal with Anthropic directly if you are, whatever NHS or, JP Morgan or whatever, even if you're benefiting from the advances in their technology.
This is such an interesting conversation. I already have two follow-up questions, but I'm also mindful of our time. I want to ask very quick two follow-up questions. One is, actually, maybe I'll just ask one, right? How do you feel about, because you said regulatory environment is kind of provides the moat for startups to build in. How do you feel about AI being regulated?
I think that's a great question. Okay, so for us, the reason when we think about AI in regulated spaces in the UK is a really big part of our thesis. And that's because of the regulatory environment in the EU and in the US. And so in the EU, you have the EU AI Act, which has just come into implementation starting in August, and we're going to see it rolling out as you go forward. And the challenge there is that the things that we want to invest in, there's four different levels for regulation of AI. The top level is things that are forbidden. So you can't, for example, do scoring, sorry, not scoring in general. Individual sort of societal scoring. You can't be like, this person is a 50. We're not going to do business with them, right? Like, you can't do that. You also can't do predictive policing. You also can't, there's a whole sort of suite of things that are forbidden. And then the next layer right under that is the high risk category. And that's basically everything that we're interested in. So AI looking at patient data, AI looking at consumer data, AI looking at sort of different parts of defense, all of those things, high risk category. And so the challenge with the high risk category is that the AI pieces within that are regulated according to the technology itself, not according to the number of users, not according to the amount of profit, not according to sort of overall scope. And within that, the cost of compliance is quite high. So it's about $300K for your first year, and then $70K following up year after year for that. And that's before you write a line of code. It's before you have any customers. And that's totally doable if you're an existing player in the field, right? Like, if you're Philips, that's fine. Like, what is $300K? That's not a big deal. But if you're a startup with only $500K of runway, that's a really big deal. And so I think that that's going to be really hard for the EU to compete in these high risk areas. And that's fine. It might be in 2 years that, like, we've seen that how the implementation of this is different. And, maybe companies are moving there, or it might just be that companies build and get big enough to where they can absorb the hit when they interact with EU customers or EU data. So that's sort of why I'm not bullish on the EU right now. And then the US is the other issue, is the regulatory chaos that's there right now. So in July, the Senate declined to regulate on a federal level and instead kicked it down to the states, saying that the states have the ability to, on a state-by-state basis, regulate AI. And so that means you have a patchwork of 50 places with 50 different regulations based on different things. And like, already some states have said, okay, we're not going to allow for AI therapists, for example. And so that really looks like, okay, am I going to VPN to go like talk to an AI therapist? Like, what does that look like? And then the other challenge is sort of on the federal level, the executive order that also came out in July around the anti-woke in the federal government. So it means that any model that touches the federal government or is used by the federal government can't be woke. And you're like, well, what is woke? Well, it's actually not very well defined. I mean, if listeners are interested, they can go look it up online. The executive order is only about 2 pages long, and it's a bit ambiguous. And so that, for me, suggests that it's actually going to be a bit of a moving target in terms of how do companies comply. And so I think, again, if you're a big company, if you're Google, like, you can play around with that. You've got an army of lawyers, you've got an army of people who can help you. If you're an AI native company and you're like, I've got 2 people and a dog, it's a lot harder to sort of anticipate where that's going to go. And so it might be, again, just try and get really big, really fast. And then you can sort of use the Uber playbook of like, yeah, we know we're going to break rules. That's fine. We're going to, get big enough to where we can hire lawyers and they're just going to, deal with it later. That's also an option. But I think that's a harder road to hoe. The UK, for me, is the sweet spot because the regulator actually just already existed. So, for example, in the financial system, you would use the FCA. And if you were, say, a company looking to use AI to mitigate fraud or catch fraud, which again, AI is really good at that. It's a lot of pattern matching. And it's like, oh, great. There's over 130 billion of fraud that happens in the UK each year. And so if you're like, oh, that's a huge market I want to go tackle, you would already be working with the FCA. And then the FCA has a rubric within internally of how it looks at AI. And so that's actually pretty easy because the UK plays ball, right? Like you were probably already wanting to do a sandbox if you were working in this space, and you can go work with the regulators and say, hey, this is what I'm looking at. Here are the different pieces. What do you think? And they would let you know. And you can get that feedback directly from someone immediately. And that's really, really helpful. So there's sort of that part around AI regulation that I think is really good. Like seeing it not as a what, but seeing it as a how, as a tool, as opposed to this sort of larger entity. And so I'm not anti-regulation. I'm just anti-regulation that is extremely hard and cumbersome for early stage startups.
So the UK essentially is not as intense in terms of regulations like EU, but it's also more centralized compared to America, which provides the right environment for you to invest in. And I mean, you kind of answered my next two questions, which was like, why the UK market, and where does the regulation create kind of moats versus the friction? You kind of answered those questions, but if you want to add on to them, feel free.
I would say the other thing that I'm really bullish about for the UK market is around immigration and around talent. So I think in an era of AI where anyone's skill can really be amplified, 10x, no problem, having people who are already really intrinsically skilled is a game changer. And as we're recording this, the US has just made the H-1B process much more challenging. And that means that talent is going to be looking for other places on a global scale that are not as challenging. And the UK has a great innovator visa system where it's quite easy to come to the UK, use this innovator visa. It's very low cost and you can start a company, right? And you can hire talent. And like it is actually quite welcoming for talent, especially on the global level, in a way that the US, might have been in the past, but currently is not. And so I think, again, it's sort of this specific alignment of time and space and geopolitics that really makes the UK quite attractive for people who want to start AI native companies, because you can do it here, you can scale up fast, you can talk with a regulator. And there's a history of UK companies, you start here and then you scale globally, right? To other English speaking places, to other Commonwealth countries, to other European countries, sort of places in the hemisphere. So I think that there's a real opportunity right now for the UK to sort of make a global mark.
Fair enough. Again, I guess going back to the earliest point about looking at the right place at the right time, right? You already answered and added your points about why regulation actually provides the moat, right? Yeah. If you could just summarize that in a few bullet points, could you do that?
Yeah. So for us, I think regulation makes the moat because it takes time and effort in order to get regulated and stay regulated. And that's something that the foundation models aren't going to come take. I think anything else that doesn't have that layer of protection. And to be fair, it's not a huge moat. If a foundation model, if Anthropic or if OpenAI want to come in that space, they will come in the space. They'll take it. But if you are already there, then you can actually take what they're doing and supercharge what you're doing, and you have a shot, right? Like it's not to say, oh, everything is for sure guaranteed. Everyone's going to only make money here. No, I mean, nothing's ever guaranteed like that. However, if I was going to make a bet on, something that does billing in healthcare, I think that's much more likely to not be taken by a foundation model in terms of capability and safety and public trust than, I don't know, image generation or B2B meetings or note taking. All of those things feel like they're like interesting and sexy and cool, but also just on the checklist of capabilities that, OpenAI or Anthropic or even Gemini could take.
I think what we're saying is that with vertical solutions, you need fine tuning, which even though the big companies like OpenAI and Anthropic, they have the funds and the brain power, etc., they cannot do that many fine tunings for that many solutions at the same time. So I think there's still, as you said, there's still ground to build on. I guess we've been talking a lot on the macro level about the regulation industries and investment stuff, and I want to bring it back to my more micro
Yeah.
individual level, which is kind of the investment process and your philosophy, right?
Yeah.
So for founders listening who might want to reach out to you, Natasha, for investment, for etc., and you already mentioned a lot about what AI native means. So
Mhm.
to the founders listening, right? What does it mean to be truly AI native in your eyes?
To be truly AI native in my eyes. Um, so look, if a founder was going to come to me and say, "Hey, I have this great idea," I'd be like, "Cool, tell me about your idea. What do you do? And then how do you use AI? Right? Like, how are you using it both in your product, and how do you solve this problem that you have, but then also what are you using around yourselves, and what does your overall like hiring plan look like? And if your answer is like, well, I kind of use AI, but I want to hire like 15 people to do all of these things, and we're talking at a pre-seed stage, it's probably not going to fly. But if you're like, hey, look, like, we're going to take this 500K and we're going to hire, one or two engineers, and we're going to just optimize on this product, and everything else we're basically like hiring out. Like, that's interesting. Let's keep talking. Like, that's kind of for me what's the big difference is like, how quickly can you scale? Because I think that can happen a lot faster. And what are you using this tool to do to help you supercharge like your already existing skills and superpowers?
That's very fair. You when you get on a call with a founder for first 30 minutes call, what heuristics or unusual signals do you look for before diving deeper into those companies?
A lot of it has to do with figuring out that product, that founder problem fit. Um, I really want to spend a lot of time to get to understand who a person is as a person, and how they think about the world and what their sort of vision. If money was no problem, if developing speed, all of these things were no problem, what is the world of success look for you and for your company? And I want for me, the people who are the most impressive are the ones who come with like a pretty good idea of what the world looks like. And it doesn't have to be really specific, but it's a world in which the problem that they've identified as like their life's work is solved. And like it's solved, and what does that solution like what does a post this problem look like, and how did they sort of get there? And I think that's really interesting because sometimes I've spoken with founders where they really focus on, oh, well, and then like we're making this $1 billion company. Like we really want it to be a unicorn or a decacorn or whatever. And like, yeah, money is nice, but I know this is such terrible sort of like cliche advice, but the money will come if the problem is interesting and if the problem is solved. And so I actually don't want to, I'm really not interested in when people tell me about how much money they're going to make me and how much money they're going to make themselves. Like, that's fine, whatever. But like, I really, really want to know, like, what does your success look like? And how have you changed the world with what you've done? And that's probably what if I don't have that much time with a founder, that's what I'm going to want to know the most, because like, if that's really interesting, it actually doesn't matter how they get there. They have the drive to get there. The technology may sort of incrementally change across or even large steps across the way, but they know what they're sort of aiming towards.
So in essentially a person who's very much obsessed and passionate about the problem and a problem, mostly the problem, and not really thinking about this, the different external kind of factors like the unicorn or whatever. And you're curious to see what their vision for post problem world looks like for them.
Yeah. And of course, I mean, this is also in the context of they've probably sent me a deck, right? Like I probably know what this is. I probably have like, oh, here's your team, here's your background, here's your problem, here's your solution, here's like this is what you're using to do the funding, and all of the sort of normal pieces have already been answered. And when I'm chatting with you, it's because I want to chat with you, because I can read your materials, right? Like I can do research on your space. Like that's fine. I don't need you for that. What I really want to know is like you as a founder, tell me about you. And so I'd say, if we only have like 30 minutes, I'd probably say I spend at least 10 minutes of that 30 minutes really focusing on them. And then, now I get you, tell me about the business as the vehicle to, you know, making that vision of your future happen.
Fair. Do you like seeing quirky personalities or?
I mean, I guess I think it does take a unique person to be like, I am obsessed with medical billing. And I've definitely met those kind of people, and you're just like, yeah, you are obsessed with medical billing. And or like people who, have been really personally deeply affected by a problem. So for example, someone who one of the areas that I'm like very curious about, and it fits in the commerce section of our thesis, is housing. Housing is a huge systemic problem, and if you can make the housing process faster, so for example, streamlining permitting, and streamlining what it is for the contractors process, and like instead of having a house take 4 years to build, you could have it take 6 months. That actually really moves the needle in terms of like societal change of we have more houses. And so when I talk with founders who are sort of playing in that space, people's stories about having housing insecurity, people's stories about like their parents having like housing issues or living in places that were really crappy. I think those are really compelling, right? Because it's a real personal reason why they want to solve it, not just because they're like, yeah, houses are amazing and expensive and like it's the biggest asset most people have in their lives. And like, if we can solve this problem, like we make a bunch of money, like those are all true, but those are sort of incidental to the larger issue of like having housing, if that kind of makes sense.
Makes sense. Makes perfect sense. I'm going to ask a bit of a
Yeah,
strange question.
please.
Usually people ask like, how do I gain funding, like receive funding? I'm going to ask a bit of an opposite question. When would you actually advise a founder to not take your bite-sized money?
It depends on what your company is, but I have sort of a list of different pockets of funding. Take that, you know, go take that and build. See how far it gets you. Don't take my money because you're probably going to be really surprised that actually this can, again, if there's only two of you and you're like 50K, maybe that lasts you for a year. Maybe that lasts you for 6 months, but that's 6 months that you don't have someone breathing down your neck other than yourself being like, okay, how are you scaling? What's going on? How do we get bigger? You have yourself being pushing yourself. And like, I think that that's really powerful. So that's sort of group one. And then group two are people who are really, really smart, but that they are on the pathway to AGI in what they're doing. So if you are doing something that is obviously part of the critical path, go try and just get hired at a foundation lab. You're clearly smart. Use whatever you've built as your like job application and be like, "Hey, I've done this thing. It's pretty cool." And then have them hire you because you can make like in this particular time and moment if you're really smart, you can get like $5 million
Mhm.
going and working at a lab and they'll be
Oh,
like, this person super cheap, what a steal. And I know there's an excitement around building your own company, but if you are sort of in the critical path, your company is going to just be outspent and it's just a matter of hours. Like you only have 24 hours in a day, and a team that is at Anthropic or at OpenAI or at Gemini, all of them have, you know, hundreds of millions to billions of dollars focused just on your problem. So yeah, it doesn't matter if you're the smartest person in the world. You probably can't compete with that.
I mean, you're very much right. Like Meta is building a super intelligence team, and their
Exactly.
contracts look like MBA contracts. It's
Yeah,
hundreds millions. Like, how do you compete with that as a
exactly.
pre-seed stage startup? It's just not possible. That's very fair. You know what I'm noticing is also VC
Yeah.
models is shifting too in the age of AI. Not only the investment sides in
Yeah.
terms of like the seed stage, sometimes resembles growth stage investments. Um, just approach to investment in general, but also the way the VC is being run as well. Like as you said, like your fund is very much AI native fund as well. So as a venture capitalist, I'm curious about your thoughts. Like how's the venture capital model itself is changing in the AI age?
Oh, that's a really good question. I think it's a hard one because people are both so VC is an interesting space because it's very much a team sport, kind of with the exception of Sequoia. Everyone else's position is like, hey, let's share this risk around the pool and everyone, take some risk, take some upside, like let's all work together to make this company do really well. And so I think that that's still very much the case is that like people are still working together, things are still really collaborative, deals are still getting done that way. But I think you've really hit the nail on the head is the round sizing hasn't stabilized. So some rounds still very low, still very affordable. You're like, oh yeah, like this is a reasonable amount of money that this size team, because like when you're just like, oh, how much should you have for like a pre-seed or a seed? A lot of it is around, okay, how much money does this team need for a year or for 18 months or for 24 months? And it's more based on like, okay, how much money do they need? Okay, we'll give them that money and then think about what the price of the overall company is worth based on that. And so you're just like, oh, okay, like if you're getting 500K or $1 million for like a pre-seed seed, say between like 250 and 5, right? Somewhere in that range. That's high, but like reasonable. But then to your point, you're also seeing some rounds, like particularly in the US, where you're just like, all right, 20 million seed, fine, let's do it. Right. And you're just like, oh, that's insane. But it may not be insane, right? Because a lot of it has to do with like the caliber of the minds that are there and how good they are at. And this is the part where I think there's a little bit of nuance. It's actually not necessarily the skill of being an engineer anymore of like, oh, can you code this thing up and like, can you do it? It's okay, how do you manage a team of engineers? Are you a good communicator? Because that kind of skill is actually what's getting much more rewarded, because then you have a team of agents that you're managing and trying to articulate exactly what that vision you're trying to build looks like, and also build in the systems of, okay, how do we debug this, like either as an individual level or as a larger level? How do you like, there are actually now ways you can manage technical debt that are really smart and interesting. And not everyone has that skill if you're, say, an engineer who's just really been an individual contributor. So I think there's also like the quality of skill is really different. And I think when you see these massive valuations and massive rounds, it's not necessarily based on what the product is that they're looking at, which is true. There are also just product category killers where you're like, oh yes, you're just taking on books as a category. That just all of the written word. That's pretty big, as opposed, or like you're taking on like, you know, clothing, right? Like there's just, it's not even a subset anymore. And so like that's also interesting because it's just like the TAMs are massive because it's just an entire global industry that potentially one company could disrupt. So that there is that. So we'll set that aside. But I think the other thing we're really seeing is the combination of that sort of product founder fit and people recognizing, oh, this person's very talented, they're really passionate about the space, but the talent of like, do they have the ability to actually execute, I think is where you're seeing the sort of next level investment. Because if, particularly when you look at people who came out of the big labs and they do get the big valuations, you're like, yeah, but they fundamentally understand how the models work. Like they do know how to get this out in a way that other people just don't have that level of experience because the models haven't been around that long. So like, of course, the person who created things, whatever subsystem in, OpenAI, of course they're going to do well because they understand how this works and they can really harness that tool in a way that other people are going to take a couple of years to scale up to.
I agree. I think there's a definitely strong correlation between brand names. Sort of, if you come from DeepMind or OpenAI,
Right.
your rounds tend to be a
Huge.
luxury, and that's very much. It's not even about the product; it's about the team itself, right? You mentioned, but I couldn't really fully remember. Could you just clarify, like, what's the typical approach to the pre-seed seed investments? Like when they decide whether it's 5 or 5 million, besides the team itself, right? Like, what's the typical way of like just looking at a company and being like, okay, we're gonna give 500 or 5 million.
Yeah. So a lot of it has to, this is like one of the things around pricing rounds has a lot to do with how much runway you think that they're going to need in order to be successful to get to their next round. And so, for example, if someone's doing something in healthcare, right? Basically, all things in healthcare have a larger multiple of this is going to take twice as long as you think it's going to take. And a lot of that has to do with just like selling into healthcare systems, having to get regulated, having to like make sure all your documentation is in place. And all of those pieces are just a lot longer than if you're dealing with consumer, right? Like the sales cycle in healthcare notoriously is 18 to 24 months. I mean, depending on what you're doing, but like generally it's a couple of years. And so you have to be like, okay, well, the amount that we're giving this team is going to need to last them probably 2 years. Like we don't want them to get finally, because it's quite, you see this happen sometimes, and it's I wouldn't say it's like quite common, but where a team has all of these contracts in place and like they're really clearly ready to go and like they've got an amazing product and they've got really good customers and they're really running out of runway. And so then you also often have to end up doing an internal round or, trying to quickly raise funds. And that's a hard place to be as a company. It's just really, really stressful. So for us, that's one of our strategies is like, how do we preempt that to make sure that our companies, if they're doing well, if they're killing it, how do we make sure that their founders don't have to then wait, like shift their efforts to fundraising and that they can just focus on executing on that problem. So that's one of the things we do as part of our strategy is try and preempt these sort of internal rounds. But it's also it's a rough place to be as a founder. So like when you're thinking about to your question of like how much do people actually raise, that's one of the things VCs will look at is like, okay, what industry are you in? How long do we think it'll take you till you get your next funding? How long do we think if you're going to start making revenue, like how does that play into this story? Does that offset, will you even need to raise in the future? So all of it is sort of really a nuts and bolts accounting. And like those kinds of things we get a sense of by doing really deep diligence. And so you dig up during the diligence process, like how much, if they are probably a second or third time founder, they've got a much better sense of like how much this is actually going to cost to get sort of through this process. If they're a first time founder and they're just like, for example, a scientist with a great idea and hasn't done it before, they might also be sort of finger in the air, like, well, we think this is what our budget looks like, but we don't really know. That's where our experience of having worked in healthcare, having worked in the finance spaces, we can say, oh, okay, well, actually, I think that you probably need more money for that, or I think you need less money for that, and this is sort of why, based on what we've dug up in the diligence process. But it's an ongoing conversation between both parties to be like, what do we think gets you there, and what do you sort of need?
And now let's take you to the future.
Yeah.
This ideal future where AI is being very much integrated and used across those regulated industries, right? Let's take a date. Imagine it's 2035. How will hospitals, banks, factories look different if the companies you back succeed?
Great question. Okay, so what does the future look like? And this is sort of my own problem founder fit. So I think healthcare, when I think about healthcare, I think it's going to be really different. And the reason I think it's going to be really different is I don't think it's going to be healthcare per se. I think it's just going to be health because one of the challenges we have is a lot of how disease works is treating it after symptoms have already occurred. I think with AI, because you can manage so much data and really gain insights in quite profound and quick ways, I think we're going to be able to do a lot more preventative care in a really, really meaningful way. And I know healthcare tends to move slower relative to other industries, but even so, if you have 10 years, I think we're going to see by 2035, I think we're going to have a lot more preventative care in a sort of localized model. So what does that mean? I imagine that we're going to have medical devices in a home or neighborhood basis that people can take that are extremely cheap and that people can do proactively. And so sort of similar to when you think about water and you think about electricity, both of those were huge innovations in terms of ability to free up time of humans and individuals and overall increase quality and standard of life. And so I think that healthcare is going to similarly be one of those things that we sort of take for granted of everyone has great preventative health. And so I wouldn't be surprised if we have something like MRIs that are $5 and 5 minutes to do that are located in every booth, or even if you live in a high-rise complex with, say, 50 to 100 units, that your complex itself has an MRI that you can just like walk into, and there's like maybe someone who mans it, and then it sends you the results of like, oh, it's fine, don't worry about it, no new changes to your body. Or maybe you should go talk to a doctor. There are two cells that look like slightly different. And I wouldn't be surprised if that happens, right? Like, because a lot of the bottlenecks around that have been costs in medical devices. But this gets to your question about like, what does manufacturing look like? Well, if manufacturing, you can have like, we already see this sort of in, for example, cars, right? Like robots that make cars are much less error prone than humans that make cars. And I think that you're going to see those sorts across all kinds of manufacturing, not to say like, oh, the robots are going to do it. Like robots are probably going to do a lot, but also the systems of all of the inputs of the data that the robots are collecting, all the inputs that the like cameras and people, everything is collecting about the system, I think are going to increase accuracy and decrease cost really dramatically. And also when you think about like, okay, if I have a MRI machine that was made in China, it coming to the United Kingdom, what does that look like? Well, I think shipping is also going to become a lot more frictionless because, like right now, if you were to say ship an MRI machine in a shipping container on a tanker, not tanker, shipping boat across the ocean, like there are multiple steps in that process of like, okay, the insurance process, the customs process, the declarations process, the actual handling of the container getting onto the ship, the container coming off of the ship, the last mile, the primary miles, all of that. Much of the freight and shipping infrastructure is still done either with paper, like fax machines, or like people talking on the phone with each other to like manage the process, and Excel spreadsheets. And I think that there's a rapidly deployable AI world in which all of that sort of is done, not to say automatically, but what looks to be seamless through multiple agents talking with each other, but it's seamless to the actual like hospital customer buying the MRI machine or human. And so I think that the world is going to be a lot in terms of health. I think it's going to be more people, more healthy, and the goalposts moving really significantly of like what is considered disease. I think it'll just be like, oh, your anti-aging medication that everyone takes and everyone has just like great health spans. And then in terms of like banking, I think that the chance that we have much more frictionless banking as well, where you have a personalized, some sort of personal agent that works on your behalf to do things and sort of lives with you and knows all of your preferences and says, oh, okay, well, like, you know, Javed really likes waking up at, 8 in the morning and then he goes to the gym and this is sort of his pattern. Oh, well, I see something that says he's waking up at, 1 in the afternoon and going to McDonald's. Maybe there's some fraud happening, right? And like being able to sort of tip that off on an individual level, but also when you are interacting with places, being able to say, hey, I want to buy a shirt, and having your own personal AI go interact with, hey, I know like this is your style. These are the things you're interested in. Let me go interact with the agents of different shirt selling companies and go and buy on your behalf. And like currently we don't have that much of the payments structure for that right now because of, again, like KYC, who is the customer, but having that eventually be tied to a person, or having AIs be tied to people and using them as like the financial anchor, I wouldn't be surprised if that's very common in 2035. I guess the last thing I imagine, particularly in the UK, is I think in terms of like defense and security, it's going to be really different. I think the UK, and this is again maybe a contrarian hot take, the UK is a weird place because it already has CCTV for basically the entire country. I remember back in the 90s reading an article in this sort of scholastic news journal saying, for kids, they were like, the UK has successfully made CCTV for everyone in every square inch of the country, and isn't that great? And I was just like, what is CCTV? And I remember having to go like find an encyclopedia and look it up now. That just seems antiquated and old. But if the country is already all on CCTV and you already have given up the civil liberties of privacy in public, then it doesn't seem like that much of a stretch to be like, okay, well, let's use that to make sure that crime doesn't happen. Not to say predictive crime, but perhaps like we know that someone shoplifted in this store. AI immediately says, oh, okay, there's an incident. Let's have direct a police person to that area to intercept them, right? Like if at the point where the civil liberties are already gone, then why not use them? And so I do think that the UK has the ability to use AI to become the first like truly crime-free society. And like I wouldn't be surprised if that is well into effect by 2035. So these are all of my like weird what do I think the future is going to look like?
They're very cool because I am seeing a lot of focus on a shift from reactive to preventative healthcare, and also in terms of like the revival of manufacturing and how to improve it with AI, which is especially in the US, I feel like there's a lot of investments, large investments in these companies in the industrial transformation and manufacturing. I guess we are you mentioned AGI and ASI, and you said where, and it's not a matter of if, it's a matter of when. And so I'm curious, like, what infrastructure must be built today to ensure ordinary people are, genuinely better off? And conversely, what kind of risks or failures do you worry about if this trust layer doesn't get built in time?
This is the whole point of the podcast, the $1 million question. All right. So joking aside, I think we see this in our lives now, just in terms of like how has capital allocated sort of ease of service and ease of execution. So I don't know about you, but when I encounter paper systems in things that are important for life, I just get like genuinely really frustrated. So, for example, when I go to the doctor and I have to fill out something like they give you a clipboard and it has like questions about your medical history, I'm just like, why am I doing this? And I know that sounds like really like, Karen, go away. Like, what are you doing? But like, but genuinely, why? Like, all of that should be digital already. You should already know who I am. If I've like made the appointment, you should have all of that information there. And to be fair, like that is the case in different places. So like I live in the Netherlands. I'm part of like the Dutch healthcare system, and like in many ways it is quite frictionless. I just show up at a place and then they're like, "Oh, you're here. That's great. Like, come on in." And so like the wait time is like 5 minutes, and like it's pretty frictionless when it comes to like all of my patient data is accessible by everyone. Everyone knows every, drug I've ever taken. They know every procedure I've ever had. They're really well versed. And oftentimes the actual like filling in of data is done either verbally or like manually while I'm sitting there. And so there's very little friction in the system. I think though that can be improved, and I think that can be exported to everywhere. And the result of that, of having that sort of healthcare system, is that it it isn't a burden. So like everyone goes. And so like everyone basically uses preventative healthcare options because there isn't a penalization, both in terms of cost, but also in terms of time, right? Like it's not like, oh man, now I have to go to the doctor. That's just my whole afternoon shot. It's like, no, it's only going to be 5 minutes and it's going to be from here to here and like we're done. And so I think that it's an example of AI is only going to make that better and have that experience spread out through society. And I think you're going to have big gains through that. Conversely, though, I think when you look at places that aren't very well regulated and capital has been allowed to flow really quickly, it's made those processes very easy. I was just trying to buy a new software for making a logo for ByteSized Capital yesterday. And I had gotten a new credit card and I was just like, oh no, like, do I need to update anything? Like, what's going on? And literally Google had all of my information. So I did this through Chrome. I probably shouldn't be saying this, but like I did this through Chrome, and like the whole process was literally just me like updating one number out of the whole checkout thing, and it was completely frictionless. And then I'm like, oh, cool, now let me start like making different logos. Can we make a new one every day? And that's something where capitalism has been allowed to roam free, and it's like really frictionless, and it created a lot of value. Now I don't have to like stress out about a process that like 5 years ago I would have had to hire a designer to do, and like it would have been 6 months of back and forth, like, oh well, I don't really like the angle, I don't really like the color, can you redo this, can you redo that? Now I can bang this out in an hour or two. And so I think that when AI gains are allowed into the places that like really, really matter for the foundations of society, that you're going to also be able to have it be easy and frictionless, and then like continue on with your day and like do the thing that you need to do. What I think the risk and sort of failure if this doesn't work is that people get really frustrated and have frictions on the things that matter most to them in the world. Because like, yes, logos are important, right? They're good for a company. That's good to have. But like, I don't know, I don't have to have a logo in order to have a company, right? Like you can function, but you do have to have good health in order to like have a good life. Because without it, like life is much more challenging. It's a lot harder. Like if you're worried about, sick. And I think that AI gives us the ability to really have a windfall in these spaces that we may not have been able to have before. Realize it's a very rambling answer, but basically, like, I think if we don't get this right, it is sort of chaos that ripples throughout society, and that you have this sort of knock-on populist uprisings, and then it kind of degenerates to who has the most weapons or who has the largest military. And that's just, I don't know, the Middle Ages, when I read about it, seems like a terrible time. I don't really want to go back to that.
So fair, same here. We are coming towards the end of our episode, and it's been an extremely informative, very interesting conversation. And I am gonna. This is more sort of for the founders listening, or perhaps you're more about your philosophy. And I have a few questions. I'm gonna combine some of them together because I feel like they're very much like related. One is, what are some stupidly hard problems that you would love founders to pitch to you right now, and why they should come to you instead of going to some other VC?
Great. So I'll keep it quick, but like these are the three things I'm most excited about. So one is the agent internet. I sort of touched on this a little bit earlier, but if you are thinking about building and thinking about how agents are going to interact with each other in a way that's like pretty separate from humans, come talk to me, because there's a lot of really interesting problems and it's a huge potential market, and it's going to need to be open, right? It can't, you can have walled gardens, but when we look at the history of the internet and when we look at the history of different technologies, they're just not nearly as successful as these sort of open models. And the agent internet is going to need to have, like, how do you do agent to agent commerce? How do you do agent to agent trust? How do you do agent to agent security? And so that's like one portion is agent internet. The next thing is agent. I think that there's probably $100 billion company in the agent antivirus space and the agent security space, because that's just really underdeveloped. And I know that the stakes are really high. And when we think about just in our current internet, you're like, well, yeah, but like viruses, couldn't you make more money if you were just like holding hospitals for ransom and other things? Yes, there are whole sectors of different sort of dark web economies that do that. That's true. But, Norton and McAfee are still like private island, crazy, rich, expensive, because you want to be the good guys. And I think that there's going to be a company that does become the good guys for agent antivirus, and that everyone's going to need to have it. Anyone who uses generative AI, period. Like, it doesn't matter if you're a startup. It doesn't matter if you are, a Fortune 100 company. You're going to need to have antivirus because it's coming, right? Like, people, when you look at it's actually a very interesting history. The history of like viruses on the internet. A lot of them are just like fun pranks that people play on each other. And then people are like,
Yeah.
we can do bad things with this too. That's going to be happening. And it's already started happening. So whoever solves that, even if you do it doesn't have to be perfect on the first go. Like, come talk to me. That's going to be really interesting. And then the last is around the data infrastructure layer for frictionless home health. So if you have that, 5-pound MRI in 5 minutes, where does that data go, and how does it live and interact with all of your other data? And how does it interact with like the agent internet and like agent antivirus, et cetera? That's going to be really important, because I think that people's personal health data is going to be really portable, but having that be tied to a person where, regardless of where they are at any given time, and being able to like walk into a building and have the health infrastructure take care of you is going to be really important. And so whoever builds that also, I think, is going to be a massive global opportunity, not just in the UK.
Can you say that again? The name of that solution, essentially, data.
The data infrastructure layer for frictionless home health.
And if they want to reach out to you, right, the founders, to get in touch, what's the best way of doing it?
If you want to get a hold of me, I'm Natasha at ByteSizedCapital.com. I'm also Natasha Naidoo, or just Naidoo, at LinkedIn. And I don't have any other social media. So just those two places.
And what's a perfect 5-line pitch email you would want to receive tomorrow?
Great question. I mean, I saw you. I heard you on Javed's podcast, and I'd love to talk more. Yeah, that's fine.
That's fine.
Really, or hey you, that also works.
And then I'm gonna ask my final question, just to tie everything together and close off. If you could or had to distill your philosophy into one piece of advice for early stage AI founders, what would it be?
Think about the thing that you are most obsessed with, and if there is a way to monetize that, maybe that's a company worth doing. And if you're not super obsessed with it, then probably don't start a company, because it's going to be the thing that runs your life for the next decade. Even if you're an AI native company and you're like, oh, I'm going to exit early, it's going to be fast, it'll only be 5 years. It's still an all consuming life choice and process. It's very similar to having a child. So yeah, it's a lot. It's very high stakes, but it's really worth it when things work well because you are solving that problem that you're obsessed with. So make the problem be your North Star, and then everything else sort of follows from there.
Got it. This has been Natasha Naidoo. Wonderful episode. Genuinely so full of insights and interesting points. And just on a personal note, it's always a pleasure talking to you, Natasha. Thank you so much.
Likewise. Thank you so much, David. Have a wonderful day. And yeah, thanks.
We'll catch up soon.